We're making a big change to our trading in 2025. This is a change I think a lot of people should be making and should be a major focus if people want long-term success in trading, especially if you're trading prop firms. We're going to cover that in this video. But before we do, fam, we're live right here on YouTube Monday through Friday, the New York Open, day trading, the NASDAQ. You see everything from my green days, my red days, my full tilt moments, everything that involves me as a trader you see right here on YouTube. Smash that subscribe button to catch those. Also, there's a link down in the description for Discord. We have an amazing community, bunch of big hitters, bunch of awesome traders, people talking trading, no BS, no drama, just traders talking trading and helping everybody become a better trader for the new year in 2025. If you want to join up on that, click that link down in the description. Also, if you want to go straight to a funded account, skip the eval stage. TradeFi is running 35% off straight to funded. Use code JM to get the best deals. With that said, let's get in the video. So what are we doing in 2025? What is the big change? What is the big focus? For me, the year is exactly that. It is focus. We are doing nothing but putting our focus into growing as a trader and doing all the right things that we need to be and putting the right processes in place for us to become one of the best traders in 2025. A lot of people talk about mentality and discipline, but there's also one really large focus that I want to implement inside of trading, and that is taking control of my position sizing and understanding how my size can affect my trading. I'm a big advocate when it comes to micros. I trade micros a lot. However, I do trade minis on the occasion, especially if I jump into large eval accounts or if I have a built up cushion in funded accounts, I will trade minis. However, I'm taking a step back for minis. For 2025, for at least the first half of the year, we are not trading minis at all. We are doing nothing but micros. All micros on funded accounts, even with built up cushion. In my personal account, evals, we're doing nothing but micros. We're going to put a big focus in position sizing. Now, that doesn't mean that I'm going to trade, 1 to 2 micros every single time. I will scale in and out of positions, maybe up to half a mini or could be even a full mini, depending on the position and how big of a winning position I am in. But we're trading micros and micros only. If there's anything I learned in the past year is that you can still make a lot of money with micros. If you take Thursday and Friday as examples after FOMC, those candles were absolutely massive. We had 60 to 100 point candles. I was trading 1 micro at a time and I still made over $600. But even on days when you're not getting those big of a candles, 2 to 3 micros at a time will still make you a lot of money if you trade it correctly and trade properly. So in my opinion, there's really no need to trade minis, right? If you trade 1 mini and it goes against you 20 points, that's automatically $400, and 20 points on the NASDAQ really isn't that big of a move. 20 points can happen within the snap of a finger on the NASDAQ. So why put up all that risk knowing that the NASDAQ moves 20 to 30 points in a matter of seconds when you could trade micros, have a larger stop loss, be stress-free, and be able to tolerate those pullbacks when you have a high conviction trade using the micros? You throw on 2 micros, you can tolerate a 50-point pullback because it's not going to cost you $1,000. But if the trade then gives you confirmation while you're in that 1 to 2 micros and it starts going in your favor and showing you that you are correct on the trade, then you can start adding into that position, layering up those micros, and start making more money by capitalizing off the move. I think a lot of people try to make too much money too fast, and they do that by minis, and then they end up blowing account after account after account. And trust me, I am guilty of that. I have traded minis. I have blown up accounts after accounts after accounts. But the one thing I have noticed is that when I trade micros, I am far more consistent with that than I am trading minis. It all comes down to self-awareness, right? You need to understand where your emotional and mental tolerance is for your position sizing, right? Can you tolerate, and do you have the account size to tolerate a 50-point pullback when you're trading 1 mini, right? Or do you need to size down and trade 2 to 3 micros in order to tolerate that pullback? It all comes down to awareness and understanding where you're at as a trader with capital, with your mental capital, the emotional capital, everything that involves you trading. It's important to understand where you are and then base your position sizing off of that. But I can tell you, for at least the first half of the year, we are not touching minis. We are trading strictly micros with a focus on good entries, good position sizing, and scaling in and out of winning trades. Let me know down in the comments what you guys are doing for 2025 to help you become a better trader. What are your goals? What's your big focus? What are you putting a big emphasis on in your trading for 2025? Let me know down in the comments, guys. And with that said, if you like this kind of content, smash that like button down below, subscribe to the channel, get more to the content, and I will see you in the next video. Cheers.